Today, we are discussing the wonderful world of real estate investing and the 5 key benefits that make it such a lucrative option for building wealth and financial security. Now, whether you're a seasoned investor or if you are brand spanking new to investing in real estate, these benefits, they're basically apply to everyone looking to grow their wealth through real estate. So let's go ahead and jump into these benefits. Now, before we dive into real estate investing, I want to say thank you for tuning in to my channel. If you are brand new, my name is Mike Fiebernitz. I am a real estate agent with RE/MAX here in Myrtle Beach, South Carolina. As you can see right here, I actually run a team of agents below me. So this channel is for all the buyers and sellers out there, for me to share all the tips, tricks, and my expertise that I've collected to help you better navigate through the real estate market. So if you could, just hit the subscribe button so that way you're notified on my next video. And let's jump in. So the very first benefit of investing in real estate is basically why everyone buys real estate, and that is asset appreciation. So over time, real estate tends to increase in value, which can lead to substantial gains when it's time to sell. Now, factors such as location, economic growth, market demand can all contribute to the appreciation of your property's value, allowing you to build significant wealth over the long term. So here's what I'm going to do. I am basically going to give you an example of a property that I bought as a rental and to show you the asset appreciation. All right, so the example we're going to take a look at is actually one of our rental properties that we bought in January 2020. And I'm going to show you a couple examples of asset appreciation based on normal markets, based on the market we went through over the last 4 years. So to give you an idea, basically what you're looking at as asset appreciation. So basically, as you can see, we bought this rental property for $75,000 in 2020. And what we're going to do is we're going to start with just a normal real estate market. Nothing that is driving it up, significant gains or down. So in a normal real estate market, on average, you're looking 3 to 5%. So 3%, 4% is normal. 5% is actually a really good market, but that's what you're looking at. So we are going to base our numbers basically off of 4%. So let's see here. So we got 20. Can you guys see that? All right, perfect. So we got 2020, 2021, 2022, and 2023. So at a 4% return, 4%. Normal market. Nothing just, manipulating the market at all. Just a normal market. 4% on average. In 2020, at the end, my $75,000 property is now worth $78,000. At the end of 2021, $81,000. At the end of 2022, we'll say $84.4. My writing's off. Anyways, at the end of 2023, normal market, $87.8. Normal market. Hopefully you guys can see that. There we go. 87.8. There. Light's not. 87.8. Normal market after 4 years. My $75,000 property is now worth 87.8 normal market. So this example, we're going to talk about the current market we just went through in 2020 all the way through 2023, which there were a lot of market demand. There was a lot of economic growth, and it really drove the values up to where over this 4-year period, you're looking at the low of 7% increase and the high almost 20 or a little over 25%. So for 2020, the actual increase that I got was 9.5%, which my value at the end of 2020 was actually worth $82,000. Now, at the end of 2021, the market increased 14.3% for my type of property that I owned, which now at the end of 2021, my $75,000 investment after two years is worth $93,900 after 2 years. Okay, almost $20,000. And then in 2022, which we all remember, 2022, just a madhouse of buyers driving up prices, it increased 25.3% that year in 1 year. Unbelievable. So now my value is $117,700. And then 2023 actually dropped back down to, well, compared to the last three, normal market to 7.4%, and now it's my value is $126,400, and this is with no upgrades, nothing new, modern upgrades, nothing like that. It's a gut job when I get into it, but that is the actual value at the end of 2023 is about $126,000. All right, so in comparison from a normal to a actual market, as you can see, $75,000 in a normal market, you're looking to basically gain about $12,700, that's pretty good. But in the actual market we went through, because of the madness of 2022, the economic growth, the market demand, these factors play into your asset appreciation, that instead of making $12,700, I actually made $51,300 on my property. Now, here's the best part. Remember when I told you that it's a gut job and needed to be completely remodeled? So let me show you after I remodel what I'm looking at. Remodeling is probably going to take about $25,000. So I'll be in it for about $100,000. Are you ready for this? When I go to sell it, properties upgraded, how I'm going to upgrade it, are selling On the low end, $200,000, and on the high end, $225,000. That means the real profit when I go to sell on the asset appreciation is $100,000 on the low end, $125,000 on the high end. All on an investment of $75,000. And here's the best part. I bought it with a mortgage. That's called leverage. Next up is the second benefit, which is passive cash flow. So you're going to buy real estate and you're actually going to rent it out. You're going to put a tenant in the property to actually make money after your expenses. And one of the most attractive aspects of real estate investing is actually the ability to generate consistent income through rental properties. After covering expenses like mortgage payments, property taxes, maintenance costs, HOA fees, rental income provides you with a steady stream of cash flow without requiring daily active involvement. It's like having your own money-making machine. So let me go ahead and show you an example of mine. All right, so we're going to take a look at an example for passive cash flow on one of my rental properties. Basically, I bought a 5-bedroom for $294,000. And we're going to start with the gross rent that I collect every single month, which is $2,350. And then what we're going to do is basically start subtracting out, all my expenses to give you an idea on some passive cash flow that I'm getting on this and what you could get on this as well. So first thing is we've got repairs and maintenance. Things break, tenants are going to break something. That's just, that's par for the course for any rentals. So basically I do about 5% of the rent that I collect. So we're looking at about a $117.50. Property taxes is next, and I'm looking at about $312. Insurance, you got to insure the property. So you're looking at about $130.58. And then my mortgage payments, which I am looking at $1,564.79. And basically what that comes out to is about $224.46 a month. For it, and for the year, hopefully you guys can see that. For the year, I'm looking about $26.93 total for the year. That is passive income, folks. That is the whole point of the game when you buy investment properties. There we go. Now you can see it. For the year, $2,693. So that's a nice little extra income coming in. So the third benefit, I think is overlooked, and it is growing equity in your property. Basically, as you pay down your mortgage and property values increase, your equity, basically the difference between your property's market value and the loan balance on it, grows significantly. So you're kind of getting double the increase in your equity because your mortgage is basically paying down the principal, which, you owe less on the property. And then as well as you're getting at least 3 to 5% every single year in the normal market. But in, this market, we're basically seeing much more than that. And basically this equity can be leveraged for future investments, renovations, or even a source of emergency funds, giving you more financial flexibility and opportunities. So this example on growing equity is the beauty on being able to basically leverage and buy more rental property. So let's take, for instance, the house, the 5-bedroom house I bought for $294,000, which I actually found a deal. All right. So right now I could sell this for $400,000. But I'm not going to do that. Okay. What I'm going to do is what's called a cash out refi, meaning I'm going to refinance all the equity, and then I'm going to take the cash out and reinvest in new property. So let me go ahead and break this down number wise so you understand. So basically on a cash out refi, you're going to refinance on $400,000. Now, here's a side note. You want to make sure the rent covers your expenses, right? So if it doesn't cover the new expenses on refinancing at $400,000, then you don't need to do that, okay? This only works on properties that you can actually refinance, pull the cash out, and still be able to cover on your $400,000 mortgage payment from the rent payment. So $400,000 cash out refi. Here's what you're going to do. You're going to go to your bank. You're going to say, I want to do a cash out refi on the property. They're going to tell you whatever it praises for, $400,000. They will give you 75%, up to 75% of the appraised value minus your mortgage balance. So my mortgage balance on this is $235,000. Okay, so we'll remember that. But anyways, for fair numbers, $400,000 cash out refi, that means $300,000. $75%, $400,000 is $300,000 minus the $235,000 mortgage I already got on it. So basically, I can pull out $65,000 in cash. I'm going to have a new mortgage of $300,000, and I can take that $65,000, and guess what? I can go buy another $300,000 property and possibly make another $2,600, $2,700. This is the beauty. This is the beauty of growing equity and what you can do with this equity over a period of time. Or if you find a good enough deal, you can actually do this 6 months after you do this. So this is fantastic. This is how you multiply your rental properties. All right, so the fourth benefit is tax benefits. Now, I'm not an accountant. I'm not going to give you advice, but I know the benefits of investing in real estate when it comes to your tax benefits when you go to file, your taxes. So any questions or anything you need regarding tax benefits, definitely talk to your accountant. But number 4, the benefit in investing in real estate is the tax benefits. So real estate investors enjoy a range of tax advantages that can help reduce their overall tax liability. Deductions for mortgage interest. So the interest you're paying on the mortgage, that's a tax deduction. Property taxes, depreciation, or even expenses related to property management can all contribute to significant tax savings, allowing you basically to keep more of your hard-earned money in your pocket, or more of your hard-earned passive income that I went over in number 2, the second benefit, in your pocket. So like I said, I'm not an accountant, so basically talk to your accountant on the tax benefits so you understand that. And instead of paying instead of having to pay 15,000 or 20,000 at the end of the year, then you might only have to pay 23,000 because of the tax liability is reduced. Fantastic benefit, and that's overlooked as well. So the fifth and final benefit, which last but certainly not least, is what we're going to call leverage. Okay, this is what all the savvy real estate investors are doing with their properties, is they are continuously leveraging on top of each other. And basically, real estate offers unique opportunities to be able to leverage your investments, meaning you can control a large asset with a relatively small amount of your money. And by using financial tools like mortgages and loans, you can amplify your returns and increase your overall wealth building potential, basically creating a powerful strategy for long-term financial success and wealth. It's what everyone does to leverage, and in the long run, you have a significantly huge portfolio of real estate holdings. So I'm going to give you an example. All right, so here is how you leverage. So basically, if you find a deal like I did, and we're going to use the $294,000 5-bedroom I bought, this is a deal, right? So what it basically cost me was almost about $60,000 of my money to purchase this. So I am in this for $60,000, 20% down. We'll just call it $60,000. Now, here's where the leveraging comes in, okay? Remember the cash out refi, and it basically, I'm going to refinance, I'm going to refinance this mortgage of $235 into $300,000, so I could take out $65,000. This is not my actual hard-earned money out of the bank. That is out of the equity of the property because of the deal I found. So that is not my money from my bank account. I didn't go earn that somewhere. This is the only actual money, dollars out of my pocket. But I could take this $65,000 and I can go and try and find another $294,000 property. And if I can find a deal, then basically I use the money from the equity of this 294 property, the first property, to do the down payment. And then I do the cash out refi on this property. So that's gone to buy that. I do a cash out refi. I got another $65,000. So then I buy another $294,000 with the $65,000, which is equity, not actual money, out of this property that I bought with the equity out of this property. So now $294,000, and then basically this is how you leverage real estate holdings to build a real estate portfolio to build wealth over time. So this is why you see a lot of investors continuously invest in real estate, because you can refinance, pull cash out, use that to buy other real estate holdings. And it's just, you see a portfolio continuously grow. Passive income, equity being paid down, markets going up. So it is almost the perfect investment that you can invest in. So this is fantastic what investors are doing. So there you have it. The 5 benefits in investing in real estate, which can be a huge game changer for your financial future. I just went over examples of where I bought properties, and from asset appreciation to passive income, growing equity, tax benefits, and basically leveraging your investments. Real estate offers a very diverse range of wealth building opportunities that can help you achieve your financial goals either soon or maybe even years down the road. But remember, always do your research, consult with experts, and always invest wisely. You always want to work the numbers. You just don't want to buy a property because you think it's a good investment, because it might not be. I wouldn't have bought this $294,000 property if it was only worth $300,000, because, I'm not really getting much out of this when it comes to leverage and the full potential of everything I just went over. Folks, thanks for watching. If you could, hit the subscribe button and look out for my next video so you can be notified. And I will see you in the next video. Have a good one. Oh, how could I forget? Don't forget to like, share, and subscribe for more insights on real estate investing, buying, selling, and any other financial strategies centered around real estate. Until next time, happy investing.